All right. Sorry, remember I told you I will not be able to use my phone for this screen recording, so I'm just using my laptop now. There's network, so I can do it for you clearly. First thing first, you will be entering your trading view. There are many platforms where you can use to trade, but trading view is not a platform where you use to trade. Trading view it's a platform where you can use to see your charts clearly. Like what I use is Xness. I use Xness. As you can see here, this is Xness. I use Xness to trade. I fund my money into Xness and I use it to trade, and they pay me in within seconds. Most brokers do take up to a day or 2 days before you can be able to withdraw. But as you see Xness pay in seconds. So let's start. So first thing first, you will come into the chart. I do like making use of the 15 minutes time frame. I've mastered it, and I also trade good majorly. So first thing first, see the market structure. In this case now, you'll be thinking of taking an entry here. Why? It's because of this. Thinking of taking an entry for a sale here. Why? Remember what I told you earlier? What fair value gaps do? Fair value gaps majorly it's for a continuation of a pattern or for a reverse. For a continuation or for a reverse. If you look at this market here, when it started going up, if you watch here, it needed fair value gaps to make it continue in its upward direction. Watch here, it created a fair value gap here, one. Come here again, create another fair value gap. Created another fair value gap. Came here, went up again, created another fair value gap. Consolidated to the upside, created another fair value gap, another fair value gap here. I don't know if you're getting me. So that is just how the markets move. Market moves with other block. Come down here, this is another block. Here. See this is another block. This also is another block. This also is another block. This is another block. Another block it's a pattern that makes something looks like it's going to continue in the direction that it's going to continue. It's going to continue in a particular direction. Watch here now. This other block formed inside a fair value gap. This is an upward order block. Look at it. It's formed U. While this one is just forming an N, small letter N. Watch it. So that is just it. If it's forming U, know that the other block is positioning for an uptrend. But if it's forming this U that is upside down or small letter N, it is positioning for a downtrend. Now let's take a look at another other block. Look at this. Look at it. It forms U that is turned upside down. Then what do you see next? Downtrend. See this other block. Other block, downtrend. So how we get all this thing done is this. Let's say I want to take a trade right now. I don't just see entry everywhere and take trade just like that. What I do is I come into the market first, look at how the market is, see the market structure, or if I cannot get the market structure clearly after I've made it look smaller, I can just go to a higher time frame to see the market structure. Understand? To see the market structure. As you can see here, it's in an uptrend. But if you are seeing it from the 15 minutes time frame, it's somehow in a downtrend. Looking at it from the 15 minutes time frame, it's in a downtrend. So let's see from the 1 hour time frame. It's an uptrend. Let's just put our trend line here. Let's take it from here. First key. It hits here, bounced up. come down again, hit, bounce. It's hitting the support, and clear there's no clear what are they calling it, clear resistance up here. The upside is called a resistance, while the downside is called a support. So this resistance has been broken, but it's not clear, sure. So once we've gotten that the trend is in an uptrend, then we'll come back to our time frame, our smaller time frame. They will now notice what is happening. Map out the recent liquidity levels. As you can see here, now, this is a liquidity level. This one here is a liquidity level. This also is a liquidity level. This is also a liquidity level. This also is a liquidity level. And let me explain something to you about liquidity levels. Once the price returns back to a previous liquidity level, it's going to retrace. It is going to retrace. That means what I mean by retrace is it is going to reverse. It doesn't always happen, but it's a reoccurring pattern. It happens once in a while. If you watch here, watch here. There's a price up here. There's another block up here. Another block in this liquidity level. And take a look at this too. See it? It's reversed. Immediately the price all the way from here, all the way from down here to up. So let me make use of another. Where is this thing? Okay. Watch. See, since the price reached here, it reversed. God. Let me just take this. It's reached here and reversed. And where is this height that it reached before? It's a previous liquidity level. Look at it here. This is also a good strategy. It's very, very simple. This one doesn't need much explanation. Once you see price heading to a previous liquidity level, remember what I told you what liquidity is? Liquidity is the lowest point or the highest point where price reached. Like down here now is a liquidity level. Right here. This is a liquidity level. And if you watch here, something similar happened too. Let me draw it all the way from here to show you what I mean. Take a look at this. Take a look at this. This and this. As you can see, this pattern happens most of the time. It's a recurring pattern. This is one of the entries. Remember what I told you, forex trading is like a puzzle. You trade what you see, not what you know. So in case you see something like this on your chart, you can just easily take the trade and expect a huge return from it, because this kind of trade is sniper entry. Sniper entry. Just watch this one. It came down, the price came down all the way down here, hit this liquidity level, formed another block, then went up all the way up to here, to this liquidity that is also up here again. So you are seeing it now. This is one strategy I do use for a sniper entry. Double top or double bottom. If it hits a liquidity that is up, a previous liquidity that is up, it's called double top. But if it hits the down one, it's called double bottom. This one is a very clear and sweet sniper entry. If you have this kind of trade, you can take this trade with full assurance that you have a huge return from it. At least minimum of 100 pips take profit. But before you can enter this trade, Market can be trickish most times. What you have to wait for is an order block to form. Just look at it now. The market, let us just imagine as here hasn't occurred yet. This side. This side hasn't occurred yet. It hasn't occurred yet. Let's just see here hasn't occurred yet. And you take this and you see this market, the charts coming down here, and it formed another block. Look at this. This is another block. Remember what I told you? What another block is? Two candles forming at the same level. This is also another block. But some other blocks can be fake outs. They can be fake outs. It can just be fake other blocks because the market is very trickish. Nobody can, let me just tell you this, nobody can teach you Forex, everything about Forex. It's through practicing and practicing, you're understanding the ones that are real and the ones that are fake. But there are something they call fake outs in the Forex market. They do fake things out so that they can take your money. The market doesn't really care about anybody. So this other block, the time you can be considering this other block is when you see the market has gone down too much, forms another block, then you can be thinking about the reverse. I see here now it reached this level here, formed another block, then it reversed. It reversed. It reversed. And went up to here. Now this strategy I just taught you now, this is one of my best strategies. I used to make huge returns from it. I won't lie to you, this is a very, very nice strategy. So I hope you've understood this one I just said now. So this is one of my strategies that I'm teaching you now. And another strategy I do use is for a reversal. I do use, and what I do consider in that one is fair value gap, order block, and fair value gap, order block, and the Fibonacci retracement indicator. So as you can take a look at this now, the market is moving upwards. It's moving upwards. Then let us say I want to take for an entry for a buy side now. This is my Fibonacci retracement. So just come here and click on this Fibonacci retracement. Click on this one. Then you can now draw a Fibonacci level from down here all the way to up here. How to notice if the Fibonacci retracement tool will go to your favor is this. If another block is formed inside this 0.618, inside here, inside this line here, 0.6, let me get the color clear so you can see it clearly. Okay. If another block is formed inside this 0.618, let us say, let's imagine here that this is where this other block formed. Then you can now consider here an entry for a buy side continuation. Let me give you an instance of where this kind of thing has happened before. Okay, let's take a look at this one here. Let's say this has happened, and the chart has just come down to here, form another block. This black and green can just form another block. And you just take your retracement, Fibonacci retracement tool. Now, how they do set the Fibonacci is you take it from the wick of the downside and take it up to the wick of the upside. You see, take a look at this. Put the Fibonacci, start it from the downside, the wick of the down candle, to the wick of the up candle. And the sweetest way to take such a profit from this Fibonacci is when a fair value gap is involved. A fair value gap is there, another block has been formed, and it is also in the 0.618 Fibonacci retracement level. Watch, immediately it hit it. It started going up. Started going up, going up, going up. And this can be your take profit. This zero, this 1.618. 1.618. This can be your take profit. Let's watch. The market went higher than the profit that you are expecting. I'll call this strategy price action. It's called price action. Sometimes if you watch here too, that's why I say that double bottom it causes fake out most of the times. I took this trade yesterday, but it went against me. No, most people think that traders don't most traders don't lose. Traders do lose massive. They lose massively. I lost a lot yesterday. That was the reason I wasn't able to teach you anything yesterday. I was just weak. I was just weak. So take a look at this. This is a very big fake out. I was thinking it's going to be a double bottom. And if you watch, it already started creating a sell candle. Sell candle. I didn't know that. I was too ignorant. I was too ignorant to notice that it was already it was in an uptrend. I was too ignorant to check it. I was just trading because since earlier this week I've been in profit. I've been in profit this week. So I was just being too careless. Overconfidence was what was worrying me yesterday. So I was just saying, okay, this is going to reverse. No need to too much trading. And I forgot that the trade, the price just hit the support of this one, started going up. And I was not thinking that it's going to I was not expecting the price to go up. I was not expecting that this fair value gap here would be more powerful. I was expecting it to come down and hit it again and give me profit. But what the chart did was it just disappointed me. Thing just hit here, enter the fair value gap. That same Fibonacci retracement level, it hit it and it went up against me 200 pips. I was in massive loss yesterday. That was one of the reasons I was not fine. I told you I'm not feeling fine. So that's it. This is one of the ways you can also check your trade. Remember what I told you: fair value gaps, order blocks, liquidity levels. Liquidity levels is for this double bottom or double top. You understand? Double bottom or double top. That is it. Before you enter a trade, you need to be very careful. Your first trade might be very, very successful. Maybe your first 2 weeks trading might be very, very successful, and I pray so it's going to be successful. But don't let it enter into your head. Don't ever let it enter into your head, because once it enters into your head, it will mess with you psychologically. You start thinking that you're not the master of the forex market. And when you start thinking that you're not the master of the forex market, you are making a very big mistake. You're making a very big mistake, because the market masters will laugh at you and they will take your money right in front of your eyes. So I'm going to repeat this strategy I just mentioned now. It's coming to the market. You must wait for the price. Like here now. Like here, I can't enter a trade here. This one now. I can't enter this trade here until I see it form another black candle that is going to the downside. Until I see it form another block. Remember, the chart of the forex market is green and red, but I just use this color because it doesn't mess with my emotion. No colors do mess with emotions most time. So I went only enter this trade for a sell. I went up for a short sell. If the market forms a black candle, and I'll be taking my take profit here. Yeah. Here. That's okay. And please, while trading, do not forget to put stop loss. Highest, make a minimum of 50 pips stop loss or 40 pips. I traded without stop loss yesterday and it dealt with me. I was in bad loss. I was in very, very bad loss yesterday. So take a look at this. When you see this, just wait for the market to hit this black level here. It creates a black candle, making it another block. Then you can just take for a short. Put your pips, 50 pips. How to calculate pips in gold is once you set this thing, you calculate it from here. 5 is 50. 1 is 10. You understand? 1.5 is 50. Is 15. 1.5 is 15. 3.1 is 31. You see, that is how to calculate pips in gold. So you can just put 50 pips stop loss. So if the market should go against you, up here, you are just in loss of, you check your lot size. If you're using 0.10, you're just in loss of $50. $50. But if you are using a 1.0, I think that will be $500, or mini lot size $5, micro lots are $5. So that is just how it is. Do not forget to put a stop loss and leave it a minimum of 50 pips. Don't let anybody tell you that you shouldn't put stop loss. Please don't joke with stop loss. Put stop loss. So first of all, check the market structure. Like I said before, I can tell you this in 1,000,000 times because I don't want you to make the same mistakes I do make. I just since earlier this week I've been in profit, so I was overconfident. Overconfidence was disturbing me, so I lost. I made it lose a lot of money. Check the 1 hour time frame. See the market structure first. First thing first. Market structure is the first thing you have to check. And once you see the market structure, let's just imagine that the trade is just here. And just imagine that here hasn't occurred yet. This place now, from here now, has never happened. What you have to do is you mark out this other block and this high level here. It's okay. Since the market have not yet this side never formed finish. I will wait for the market to reach this liquidity level, or I'll wait for it to reach this other block here. There are 3 types of other block. Let me show you 3 types of other block. Let me draw them for you so you understand what I'm saying. This is, let me just draw this after I'll still paint them. Let's just say this is a buy candle. Let's say this is a sell candle, buy candle. So if you watch here now, so let me just put this small wicks. Bend hand. Man is not straight. I'm not an artist. Bad artist. So if you watch here now, this is another block. This is another block for a buy side. This is another block for a buy side. If you watch this thing now, sell candle formed, then all of a sudden a green candle for a buy candle came up, another buy candle, another buy candle. So this is another block. This can be considered as another block. This guy right here can be considered as an other block. My friend right here is considered as another block. But let's just imagine it's turned out this way. Okay, so need to change the colors. This video is going to be very long. You need a lot of MB to download it. I think that's what we got. We all will pay for knowledge. So as you can see this now, this is a sell side order block. I think the first one I did was a buy side order block. Look at this. Green candle, green candle, green candle, and all of a sudden, red candle formed. Started going down. The market started. Let us imagine the market kept on dropping. Dropping. So you see this? It can even drop down. So you see this? So that is just how the forex market is. And just how you can use to identify another block. I mean to say. First thing first, find out the market structure. Check if the price of the market, what I mean by price is the chart. Check if the price is in the support or is in the resistance. I believe you know what support and resistance is. Check if the price is in the support or if it's in the resistance. If it's not in the support or in the resistance, wait for it to form another block inside a fair value gap, or let it form another block in a liquidity level. Then I believe you know what to do next. I think this is what I just can. Oh, this is what I can just tell you right now. If you have questions, please don't fail to ask me. Don't fail to ask me. I can also make another video for you. You've been patient enough for me, and I owe you a lot. Sincerely speaking, I owe you a lot. So this is just what I can teach you right now. The two strategies that I do use to make money trading forex. So hit me up if you have questions. I will be here for you. Thank you, sir.